Yeah, Happy New Year. Yes, indeed, actually, today's data beat expectation. This is very different from a few days ago when the MBS manufacturing PMI missed expectation. And remember, this is not the first time. In November, we also see the similar divergence. MBS number missing expectation, but the market PMI or Caixin PMI beat expectation. I think partly because of the sample difference, which suggests that in different sectors, the activity has been quite divergent. And this is not a new phenomenon in China, particularly if you look at China's economy throughout the year, some sectors actually has been performing much stronger compared to, on the other side, for example, housing market still very weak. So I think it really depends on which sector, which sample companies are including the survey. But overall, I think the message is that entering in November, December, the economic activity seems to have slowed down compared to in early months. However, we're not in the similar the slowdown scenario we saw in the second quarter. So yeah, I think activity still continues, although the momentum seems to be softening.
How would you rationalize and reconcile the gap between what the state firms are doing backed by the government versus the private firms, which are smaller in size and more targeted?
Yeah, the Caixin PMI is mainly based on the smaller companies and also export-oriented companies. So I think that in terms of sample, they are very different compared to the official MBS statistics. MBS, they are more balanced data across different sectors and also across different firm size. So if you literally take the data difference in the last 2 months, that suggests actually the exporting sector is still holding up better compared to the domestic oriented.
Okay, so you're talking about exports, and let's talk about the currency. From a level of, closing into 7.50, at least the calls were growing for 7.50, 2 months ago or 3 months ago. And now that's completely changed. Now we're looking at the currency at 7.12. How does that set in with the whole export growth narrative or the impetus to push exports?
Yes, so the export activity, depending on which indicator you look at, actually the conclusion can be very different. Of course, the headline export growth in US dollar terms turned negative, and actually was negative most months of this year. So compared to the strong performance 1 or 2 years ago, we see clearly the disappointing performance on export for this year. But large part of the headline export decline is mainly driven by the pricing effect. So you mentioned the currency, right? The currency has been depreciating most months throughout the year. And also Chinese export has been cutting price to maintain the global export share. So if you filter out the price effect, and if you look at volume term, export volume is still increasing. So that's the point we highlight, actually export performance is more resilient than we anticipated at the beginning of this year. Now, the recent months, actually, the CNY change also is more a reflection, a mirror image of what's happening in the US dollar. Because actually in the US side, we see the changes in inflation dynamics, and the market has been adjusting the expectation on the US Treasury yields, and also the dollar has been. So in current regimes, based on the basket exchange regime, when the dollar strengthens, actually the current CNY will weaken. Now it's opposite, right? That when the dollar actually softening, the CNY gain against the US dollar.